Hello traders, Mandla here at FX Link. Thank you for joining us on another episode of Sunday Market Preview. In today's video, we are going to take a look at a structure-based trading opportunity and talk about the difference between predictive analysis and reactive analysis. And if you could clearly know what sets these two apart, you'll clearly be on your way to building a rule-based system by which you can save yourself time, effort, money, and gain consistency regarding your trade execution. Now, without further ado, let me not waste much of your time. Take your pen and paper to take your notes on, and I'll see you on the charts. Hello traders, in today's video I'm going to give you an analysis on this US dollar versus the Swiss pair. Now, as I do my predictive analysis, the first thing I want to look at on my daily time frame is what the market is doing. And in order for me to identify what the market is doing, I like to put lines on my support and resistance levels in order for me to see clearly how the market is behaving. Okay? Now, as I take my horizontal line and put them where my support and resistance levels have been, you would notice that I have my support levels over right here, okay, and I have my resistance level over right here, okay. So ever since I have a pretty significant resistance level right here and a support level that has been holding over right here, I would want to notice what the market is currently doing right here. And as the market broke below our 94.38 levels, it began to resist at these levels of structure. Okay, so as we played all out, the market went to resist at these levels of structure, gave us a 3 drives pattern. Okay, then price broke below our support levels, and as price breaks below or breaks above our pretty significant structure levels, we would mainly want to position ourselves up for a trend continuation in the direction of the breakout. In this case, we have a break below, close below our support levels. That would give me an indication that I want to set myself up for a trend continuation trade on the downside. So as price broke below these levels of structure, it gave us a resistance level over right here. Okay, now as we got our resistance level over right here, you would notice our previous support levels switched roles and now has become our future resistance levels. Now, as we pay a closer look over right here, you'd see that this support level right here, okay, is higher than this support level over right here. Okay, so price has given us another break below, close below. Okay, so this is a clear sign that price will still be looking to at least retest these lows of structure. Okay, now as we have a downtrend and a lower low, lower close, where is the market mostly likely to go at? Let me clean the chart first, guys. Okay, now we are going to look at where the market is most likely to go at. So since the market has extended, has given us a break below, close below, I would look to go back in the past and see where the market is most likely to go. It's price. I'll take a look at the next support level where price is most likely to extend at. Okay, so in this case we have our support levels holding at these levels of structure right here. So excuse me guys, So as you identified our support levels right here, price has a likelihood that it would extend over to our 91.50 levels. Okay, as we have a sign that price would more than likely to extend, at least retest these lows and extend to 91.50 levels, we'd want to catch this move down to those levels of structure. And as I go to my lower time frame, cool, as I get to the 4-hour time frame, I would mainly look for a kill zone where I would be looking for a potential shorting opportunity. And in this case, my zone is gonna come over to this level right here, this resistance level right here. Why? This resistance levels has held and gave us a good reaction where I would be expecting another similar type of reaction to occur in the later future if price does give us a retracement back to this structure level right there. Now, as I take my Fibonacci tool, another tool that I'm using consistently on my analysis, from this high back to this lower close, you would see that I get a 618 retracement at 93.61 levels. Okay, now as I get a 618 retracement, you would notice, excuse me guys, let me take this out, so I would take this. Now as you would see, as I have my Fibonacci retracement tool back to my structure level right here, I have two things lining up over right there. Okay, now in order for me to pinpoint exactly where I would want to minimize my risk and maximize my reward, I would go to the 60-minute time frame to do so. Okay, now on my 60-minute time frame, I mainly look for patterns that often occur in the market, and as you notice right here, we have a big bearish candle which gave us some type of reaction in the market, giving us a sign that sellers in the future might be looking to sell over to these levels of structure. And again, previous support became our future resistance, but our zone is pretty big. If I would enter to these levels of structure, I would have a risk to reward that's not quite favorable to me. So I'll be looking for a much deeper pullback into these resistance levels of structure. So as price went down, it ebbed and flowed and gave us some type of support and resistance that are quite significant. As price came to these levels, supported, gave us our support, resisted, went down, gave us a particular channel, broke down, giving us our support, double bottomed over here. After double bottom, give us our resistance over here, lower low, lower close, higher high, higher close, higher than this particular level over right here. Okay, now ever since we got our higher high, higher close over to these levels of structure, I'll be mainly looking at a pullback to those levels of structure in order for me to have a projection of an extension. Okay, so as I put a line, okay, let me put a line over to these levels of structures, you would see. So if we have a pullback from these previous support, the resistance levels right there, I would have a ABCD pattern lining up to these 618 retracement level right there. Okay, back to these levels of resistance. So let me put a line exactly to those resistance levels right there. Let me thicken this up, make it more darker. Okay, then another tool I might use is an extension from that swing low back to this swing high. We have a 1618 extension lining up at our previous resistance levels right there. So if price does come to these resistance levels, then what is our entry techniques? What are our rules for our entry if price does come to these resistance levels over there? The main purpose of a predictive analysis is that it gives us an edge, a certain style of trading that has a specific process that if you follow on a consistent basis, you will have the ability to process information on any price chart, and be able to see opportunities that don't only give you high probability trades, but also offer low risk and high reward trades on a consistent basis. In this case, as we are done with our predictive analysis, if price does give us a deeper pullback to these resistance levels, okay, your entry technique might be, you might be looking for price to give you a little bit deeper retracement. Then you would want to catch a lower low, lower close and enter next bar market, as you would get a lower low, lower close. Let me make it more orange. I don't know if it's clearly visible. Okay, and enter next bar market, as you would get a lower low, lower close with a risk to reward that's something like this. Stops higher than this previous high over there. Okay, let me make stops red, and targets probably at these previous resistant levels over right here. The next thing you might be looking to catch is if price does come to these resistant levels, you might look for, if you are a conservative trader, you might be looking for a top out after price giving us a high. Then you might look for a double top, then a lower low, lower close, and enter next bar market. And last option is that as soon as the market opens, you might set a limit order to enter at these levels of structure where we get our Fibonacci confluence with a stop loss that's 10 pips above this level, or an ATR stop, which would put us at 30 pips worth of risk and a reward of 81 pips total over right here, which is a 1:2, 2.6 risk to reward, which is not too shabby. So if you like this video, subscribe to our channel, give us a thumbs up by clicking that like button, and share these videos with as many people as you can, as we have been believing in community. And I hope you enjoyed this video. From me, Mandla, I'll see you on the next trade. Goodbye.